Good morning, all, and welcome to another one of my videos. I have one pair on watch today, that is pound Aussie. I have just taken euro dollar off of watch, and I'm briefly going to explain why that is, actually, because I think that might be useful to one or two of you. So if we just load up euro dollar. So on the higher time frame picture, we know that we had, just going to break this down quickly because I don't actually have this on watch at the moment. So we had the 1, 2, 3, which tapped into that area there. Okay, we then pushed up with the impulse correction. We tapped into this area here by way of a 1, 2, 3, broke above, caught people the wrong side of the market, pushed back down. And if you remember on the lower time frames, I was looking for a structure such as this, which just so happened to retest the back of that. We had this 1, 2, 3. So we had a middle section here. We had this 1, 2, 3 within this 1, 2, 3 within a potential 1, 2, 3 to the downside. So last night when I was doing my forecast, we had this, we pushed up to this area, the area of value, and exactly as I was anticipating, we pushed down aggressively. Okay. So what I was looking for price to do after it pushed down aggressively, given that this this forecast was done last night. I was looking for price to just correct through the night, through the Asian session, okay? And if it had, I would have been looking at this morning for a potential short, either within the flag such as that or on the break of it. However, and I was anticipating this as a possibility as well. Okay, so it's about being neutral in trading. This was definitely a possibility. However, because we are sat at a profit taking area, as I said, when we break these trend lines and we do so aggressively, we know that we've got a 90% chance of getting to the 90% to 90% of the way to the start of the structure. Okay, so the start of the structure is here, and that's why we call this the 90% rule. And another additional confluence factor was the fact that we near missed this area, near missed this, meaning that there's still likely liquidity down there, which also needs to be filled. However, because we are at a low, and it's the first significant low since this one here, it will obviously be by definition a good area for people that don't see the market as we do. Those of us who trade the Falcon strategy, we have to remember that not everybody sees the market the same way. So for many people, this will be a good profit taking area. Well, why is that significant? Because it means that price may correct for longer than it otherwise might do when it comes to the setups that we look for. So I'm thinking about these things. So one of the things that I was thinking last night is that we may push down and not correct. We may just scoot back up and then drop again. Now, if we do that, particularly if we haven't tagged the previous high, so we push back down, scoop up aggressively, and then push down, but don't tag this high, then that is often the start of a middle section. Okay, so when we see that, that's often at the start of a middle section where price will repeat the same behavior down to these inflection points here, down to these lows, and then we push up again, and then this becomes a middle section within. We then evolve our trend lines like this, like so. Okay, let's say we have it something like that, or more likely because it would make sense given the spacing from, let's say, that point there. 1, 2, 3. And when I see things like this, I'm always thinking to myself, well, why would price scoop up aggressively here, and why would it form a middle section? Where is it pushing up to before that potential move to the downside? So sometimes if I can't see anywhere, given that we're now trading above here, I look on the lower time frame. So I drop down to the 15-minute chart, and you can see this sharp move up, sharp move down there. Now, if we just move the ray line there, you can see that we kind of tapped into that area, but we didn't really break above it. And sometimes we need to break above it to take out all the stop loss orders and all the limit orders that are in that area. Okay. Now, this kind of makes sense if we actually drop down to if we just look at the DXY, which is the inverse of euro dollar. I'm not going to go into too much detail as to why, but I have explained it in previous videos. If we just briefly look at the DXY, and I'm just going to flip this chart upside down just to make it simpler for you to illustrate the point. If we just drop down to the 50-minute chart, you can see that similar thing happening there. Okay, so we had this 1, 2, we broke above, broke back down, but then we scoot back up, scoot back down, scoot back up again, and that's why I've got this drawn as I have, because this looks like it's potentially a middle section now to push up. And if it is a middle section, we would have this 1, 2, 3, given that the market usually gives us fairly equal spacing between the touches, which just lines up with this sharp move up and the sharp move down here. Okay, so that gives me a clue that there are potentially orders above price. Now, if we just go back to euro dollar, and if we just type it in correctly, the ticker code, there we go. Right, so the thing is with this, even if that was to occur, well, it wouldn't be ready by the end of the day. If we just count the candles, it just wouldn't be ready by the end of the day, because even I don't trade after 7 o'clock, so we would need that middle section to form. And then there's another thing to factor in here, is the fact that when we go from a larger correction, if this was to form, we would have a much larger correction. Okay, if we had something like this, a large correction immediately after a large correction. Now, what often happens with these is we often get what's called an M style pattern, because typically speaking, we shouldn't need such a large correction coming out of a bigger correction, because the volume for the move to the downside should have been built up in here. So we should see smaller corrections than the one that has preceded it. So if we don't see that and we build volume again, then what happens in a lot of cases is that this becomes an M style pattern, and this gets too voluminous and we just break to the upside. And then what we find is that this just becomes one big structure. Okay, so we have an expanding pattern such as that. We remove all the lines off the chart. Price pushes up to here. We wouldn't know how it was going to do that. And then that becomes our area of value for that move to the downside. And that would make sense, given that, as I said, we are trading at a significant low, which would be a good profit-taking area. And if we actually also look at the nature, we who trade the Falcon strategy, look at the nature of the market. We've had these kind of swings, push down, correction, push down, swing, push down. So it's been moving in a very corrective way. And sometimes when we move in that way, we have, something like this. You see it's responding to that trend line. We don't typically trade these on the way down as such. But if what I was talking about was to manifest itself, then it wouldn't be surprising to me if we did form a structure like this, which just so happens to tap into a trend line like this before pushing to the downside, given that this has been a corrective wave. Hopefully that makes sense. If it doesn't, feel free to replay this video, but that is my thought process anyway. And I'm going to talk to you now about what I have on watch, which is pound Aussie. So just leaving euro dollar alone for the moment, because we are quite far in the run. If I was to take euro dollar, the structure needs to be very clear to me what I'm actually looking for. So when price starts doing something which implies it's forming a more complex structure, then I'm happy to leave it alone, given where we are on the higher time frames. So pound Aussie. Why am I looking at pound Aussie today? This is the pair that I have on watch. Well, the first thing that stands out to me is the fact that we have broken above. We have this sharp move up. If I just zoom into this piece of structure, the things that stand out to me here is that we have this sharp move up here, sharp move up followed by a sharp move down. That gives me a clue that a lot of orders were placed in this area very quickly. The orders were filled. Of course, people have stop losses, and people then see this as an area of value, and people place limit orders above there, etc. Sharp move up, sharp move down, which caused this massive move down to here, or you could argue here, before price started to correct. That gives me a clue that there's a lot of volume there. Okay, we had this volatility wick. You can see that this just doesn't make sense regardless of what strategy you trade. This just does not make sense in terms of how price has been typically moving, and when that's the case, that is typically just a volatility wick. And one of the ways we determine whether it's a volatility wick is we flick to the line chart. You can see the wick doesn't appear, so therefore we deem that to be a volatility wick. Regardless, though, you can see that it tapped into this area, but it didn't break above it. Okay, so when it snaps to the area like so, this gives me a clue that this is an attractive area for people to be getting out of their positions for a potential sell. Okay, and if we just zoom out, if I just auto scale this ever so quickly, oh, it is auto scaled, right? There we go. We also have, if we just look at this to the downside, there's a lot of wicks on this pair, but if you actually look, which you zoom in there, we don't know what caused that, but pound Aussie can be a wicky pair. But regardless, we also have a near miss here. So we have this low here. Admittedly, it is a wick. It would be better if it was full price action, but we do have a near miss to this area here. And you can see that this area, if I just get the paintbrush tool, one of the reasons this is a significant area, again, I've just cut through this wick. You do have to read between the lines with some of these pairs. You can see that this is actually the start of a piece of structure, which would be a very good area for people to get out of their positions. So this is a more attractive area. When I see a near miss to a low such as this, it's a more attractive, it's more likely in my experience that price will gravitate to that low, particularly when it is the start of a piece of structure such as that. Okay, so that's another tick in the box. When we have these near misses, if I just take that off, when we have these near misses, it's more likely that price will gravitate to the downside if we have a near miss such as that. And if I just drill down, you can see that we have this textbook example of people getting caught the wrong side of the market. So on the higher time frames, we see price break above highs like this, where people would have had their ray lines. And, you know, these brokers come out with things like pound Aussie at, where are we, 2-year high. And the people who've seen this going up and up and up, and who believe that what was previously resistance becomes support once price breaks above it, they start buying here. The brokers put their little ticker things out. Like I said, pound Aussie at 2-year high. It encourages the FOMO, and what we see in the majority of cases is price come crashing down. Okay, so we have the impulse correction continuation. So then I ask myself, given that we've just caught people the wrong side of the market, and with all the things that I've just said, are we positioned for a move to the downside? Am I well positioned? Well, in my experience and opinion, the answer is yes. We've moved up to this area quite correctively. We've caught people the wrong side of the market, and we're very high up in the run for that potential longer term move to the downside. So yes, I'm well positioned. And even if we reacted from this area and just stalled for a while, okay, given that this is likely just a good profit taking area for people, there's more than enough profit from there to there for us to capitalize on. So yes, in my experience, I'm very well positioned. Next thing I ask myself is I look at the sequence. Okay, so you can see this structure forming here, which has completely negated all of this. It's completely cleared this move. So that gives me a clue that we're well in the clear, and that this is not part of a larger structure. Okay, so the next thing I ask myself is the sequence. Has the sequence been reliable? So we broke above. This is where we caught people the wrong side of the market. This was a little bit strange, but this is so far away now that the sequence has been reliable since then. So I'm not worried about the fact that we went from an impulse into a larger correction straight away. I wouldn't have been looking for entries in here because of this correction being so large relative to the move down. But sometimes this can happen because the confidence has to come into the market for the moves to the downside to occur. And once the confidence does start to come in, then the sequences can become more reliable. But this is not typical. But since then, we've had the impulse down, kind of larger tight correction into tighter corrections, which then went into a larger correction. Just this overall structure here. For those that I appreciate, not everybody trades the same way. So we have that structure there. We then have the more reliable looking sequences moving out of that. We have the impulse correction, another tightish correction into a larger correction, and then we push down. I'm very happy with the sequence. So then the last question I ask myself is, what's my entry like? Is the entry, do I have a potentially high quality, a potentially low risk entry? Well, in my opinion and experience, the answer is yes. If we just look at this, I haven't got a lower trend line on at the moment because we haven't really pushed off from this area down here. But what we do have is we have price consolidates. This is a prime example of where we wouldn't take a trade, okay? So after such a big move down, which I've just showed you, we wouldn't typically take a tight flag here. We would want to see a more developed structure. Remember, in previous videos, I've said I'm always looking at, even if we take the move down from there to there, I'm always looking at whether there's been a healthy correction afterwards. And you can see that we've typically, a healthy correction to me is anything in the region of 30 to 50%. Okay, so impulse down followed by correction of that kind of pullback, that kind of magnitude. And in this instance, you can see we've not really even got close to 30%, giving me a clue that this is not a healthy enough correction, and that price will likely need to correct for longer to build the volume that it needs for the higher time frame narrative, the higher time picture to actually play out. Okay, so price always is either finding volume or it's building volume, and if it's doing neither, then if it hasn't found volume, then it needs to build volume for the next move to the downside to occur. So what we have after this tight flag is, it's no surprise to me that price pushes down, scoops back up, and now we have a sharp hook point. We have a sharp move up, sharp move down, which gives me a clue that there's a lot of orders that have been that were placed in this area very quickly when this sharp move was formed. We then get close to that area, we sell off correctively. What does that tell me? That tells me that people are trying to sell this while other people are placing areas above market price, given that price action is just the mid price of the bid orders, the bid orders and the ask orders. Okay, so we sell off correctively, we push up again, we near miss that area again. What do? We sell off correctively again. That gives me a clue that this is people trying to sell this whilst people are placing orders above price. Well, if they're placing orders above price, where are they likely placing them? They're likely placing them at this area of value, okay, with limit orders and stop orders being above here. So with all of that said, and all things considered, what I'll be looking for today, hence why I have an alert set just below this sharp area of liquidity there, I'll be looking for price to tap into this area. And if we do, ideally we get a bit more of a base. So we push down a little bit lower, we get a little bit more of a base, and then we push up. But if we were to do so by the end of the day, we would have this 1, 2, 3 touch structure, which just so happens to line up with the sharp hook point there. And if we were to get that, then I'm just going to move this off the chart for a minute. If we were to get that, I will be taking a risk entry. There's nothing above to worry about. You can see there's a little area of consolidation there. But if we just look at that in terms of this range, okay, so if we just measure that range, that little area of consolidation is about, it's like 80% of the height of this range away. So therefore, I'm not worried about that. And it's a very long distance away, so I'm not worried about that. So if we push up to the area, I'll be looking to get short with what we call a risk entry. This is a low risk position. I'll be looking to get short with a risk entry, either after a 1 hour rejection, or if price starts to consolidate along here, I will drop down to the 15-minute chart, because we would likely have some kind of little 1 hour structure, which would give me permission to drop down to the 15-minute chart to see if I could get a phase line break. Okay, so where we would effectively have a very small piece of structure. Of course, this may not be ready by the end of the day if that was to occur. Excuse me. But I would drop down to the 15-minute chart to see if I could put a trend line on the bottom of the consolidation and then get short on the break of the consolidation, if that makes sense. But most likely, given that this is a daily forecast, most likely we would just push up to this area, and I would be looking for a 1 hour rejection. Ideally, price breaks above here, taps out all the limit orders, and then I would be looking to get short. That's all I'm going to be looking for today, folks. I've tried to put a different spin on this and just give you a kind of different perspective, particularly where euro dollar is concerned. But I hope you found this educational, and I will be back tomorrow with another video. Thanks for watching.